Warren Buffett, often called the Oracle of Omaha, is widely regarded as one of the greatest investors of all time. With a net worth in the billions and a legacy that spans decades, Buffett's investment strategies and philosophies have made him a role model for aspiring investors worldwide. His wisdom, encapsulated in numerous quotes and teachings, offers invaluable lessons for anyone seeking to build wealth. Here, we delve into some of Buffett's most insightful advice for those aspiring to become rich. Rule number 1: never lose money. Rule number 2: never forget rule number 1. At first glance, this advice might seem overly simplistic. However, it underscores a fundamental principle of investing: the importance of capital preservation. Buffett emphasizes that avoiding significant losses is crucial because recovering from a loss requires a much larger gain. For example, a 50% loss necessitates a 100% gain just to break even. This principle encourages investors to be cautious and prudent with their investments, avoiding unnecessary risks. Price is what you pay, value is what you get. Buffett's distinction between price and value is at the heart of his value investing strategy. While the price of a stock is its current market price, the value is what Buffett believes it is truly worth based on fundamental analysis. This means looking beyond market fluctuations and focusing on a company's intrinsic qualities, such as its earnings, growth potential, and competitive advantages. By buying stocks that are undervalued relative to their true worth, investors can maximize their returns. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Buffett advocates for investing in high-quality companies with strong fundamentals, even if their stocks are not deeply discounted. Quality companies tend to have durable competitive advantages, solid management, and a history of consistent performance. Over time, these businesses are more likely to provide sustained growth and stability, making them safer and more lucrative investments. Our favorite holding period is forever. One of Buffett's most famous tenets is the importance of long-term investing. He believes that once you identify a great company, you should be prepared to hold on to it indefinitely. This approach reduces the impact of short-term market volatility and capitalizes on the power of compounding returns. By focusing on the long-term prospects of an investment rather than trying to time the market, investors can achieve more consistent and substantial growth. The stock market is designed to transfer money from the active to the patient. Buffett warns against the perils of active trading and market speculation. Frequent trading can incur substantial costs in the form of commissions, taxes, and missed opportunities for compound growth. Instead, Buffett advocates for a patient, disciplined approach, investing in companies with strong fundamentals and holding them for the long haul. This strategy minimizes transaction costs and allows investments to grow uninterrupted. Risk comes from not knowing what you're doing. Buffett highlights the importance of education and understanding in investing. He advises investors to thoroughly research and understand their investments before committing their money. This means studying financial statements, understanding the business model, assessing the competitive landscape, and keeping abreast of industry trends. Knowledge and diligence reduce risk and enhance the potential for informed, successful investing. Be fearful when others are greedy and greedy when others are fearful. This quote encapsulates Buffett's contrarian investment philosophy. He suggests that the best opportunities often arise when market sentiment is at its extremes. When others are greedy and stock prices are inflated, it's time to be cautious. Conversely, when fear drives prices down, there may be buying opportunities for the discerning investor. This mindset requires emotional discipline and the ability to think independently, traits that have served Buffett well throughout his career. Warren Buffett's wisdom offers timeless guidance for anyone aspiring to achieve financial success. So good luck and happy investing. His principles emphasize the importance of prudence, patience, and a deep understanding of value. By adhering to these principles, investors can navigate the complexities of the stock market and build wealth over time. As Buffett himself has demonstrated, the path to riches is not about quick gains, but about making smart, informed decisions and staying the course. In a world of financial noise and market speculation, Buffett's clear, rational advice remains a beacon for investors seeking to build a secure and prosperous future. Whether you are a novice investor or a seasoned professional, Warren Buffett's teachings can help guide your investment journey, providing a foundation for long-term success.